Bears are currently better positioned for this week's $510 million BTC options expiry, but their overconfidence could give bulls a chance to flip the table. Bitcoin has been trying to break above the $20,500 resistance for the past 35 days, with the latest failed attempt on October 6th. Meanwhile, the bears have displayed strength on 4 different occasions after BTC tested levels below $18,500 during that period. Investors are still unsure whether $18,200 was really the bottom because the support level weakens each time it is tested. That is why it's important for the bulls to keep the momentum during this week's $510 million options expiry. The October 21st options expiry is especially relevant because the Bitcoin bears can profit $80 million by suppressing BTC below $19,000. Bears place their bets at $19,000 and lower. The open interest for the October 21st options expiry is $510 million, but the actual figure will be lower since the bears were overly optimistic. These traders completely missed the mark, placing bearish bets at $17,500 and lower after BTC dumped below $19,000 on October 13th. The 0.77 call-to-put ratio shows the dominance of the $290 million put-sell open interest against the $220 million call-buy options. Nevertheless, as Bitcoin stands near $19,000, most bearish bets will likely become worthless. If Bitcoin's price remains above $19,000 at 8 a.m. Universal Time Coordinated on October 21st, only 4% of these put-sell options will be available. This difference happens because a right to sell Bitcoin at $18,000 or $19,000 is worthless if BTC trades above that level on expiry. Bulls can still flip the table and secure a $150 million profit. Below are the 4 most likely scenarios based on the current price action. The number of Bitcoin options contracts available on October 21st for call, bull, and put, bear instruments varies depending on the expiry price. The imbalance favoring each side constitutes the theoretical profit. Between $18,000 and $19,000, 0 calls versus 4,300 puts. The net result favors the put-bear instruments by $80 million. Between $19,000 and $20,000, 1,500 calls versus 1,100 puts. The net result is balanced between calls and puts. Between $20,000 and $21,000, 4,300 calls versus 100 puts. The net result favors the call, bull, instruments by $85 million. Between $21,000 and $22,000, 7,200 calls versus 0 puts. The net result favors the call, bull, instruments by $150 million. This crude estimate considers the put options used in bearish bets and the call options exclusively in neutral to bullish trades. Even so, this oversimplification disregards more complex investment strategies. For example, a trader could have sold a put option, effectively gaining positive exposure to Bitcoin above a specific price, but unfortunately, there is no easy way to estimate this effect. A few more dips below $19,000 would not be surprising. Bitcoin bears need to push the price below $19,000 to secure an $80 million profit. On the other hand, the bull's best-case scenario requires a pump above $21,000 to flip the tables and score a $150 million gain. Bitcoin bulls had $80 million in leveraged long positions liquidated on October 12th and October 13th, so they should have less margin than is required to drive the price higher. Consequently, bears have higher odds of pinning BTC below $19,000 ahead of the October 21st weekly options expiry.